I swear I ain't giving up, I'm in it to the end. Flew out for the weekend, couldn't wait for the 10. Baby mama keeps waking like, bitch, get off my dick. Been in this shit for a while, they be like, damn.
Dear vibes.
Slowly at the top, lot of people are watching and want me to flop. I'm telling the kids if I can do it, then anyone can. Car came from none, one stop and
Brand new week, brand new month. Last monthly candle, extreme bearish, broke previous monthly highs. December highs remained above the December lows. Obviously, since November, we haven't broke any monthly lows really. We're making a bottom wick right now on the monthly. I anticipate a price to continue up and break the highs eventually, but obviously since the start of the month, we could even be creating a wick all the way down to here potentially, right? 2680s maybe. This whole range could just be a wick for the next few weeks, and then with momentum, data coming out in the bulk of the month, because there's a new fresh rotation of data as we go into a new month. So once we get into the middle of it and a lot of the important data came out, that could potentially fuel further buys into new price discovery mode. On the daily, we just had Friday last week close minor bullish with major wick. So obviously, like that major wick was a 4-hour candle engulfing the previous candle. So major rejection. Then the next daily candle we just opened now didn't even break the previous highs, nowhere near. Created a top wick, flipped out, broke the previous lows, and is now engulfing the previous candle, the previous daily candle, as we tap into the 2775s. Now, this was inevitable as we were at new all-time highs Friday, new all-time highs closed. We pretty much closed at all-time highs, ranged around for a bit. So basically, there was 3 AOYs. I was focusing on this, but obviously now that's broken, it's invalid. So it's really just this AOY and the 2733s. 2733s and the 2770s is the AOYs that I'm focused on right now. Obviously anticipating intraday pullbacks, bearish corrections, still maintaining that bullish overall structure, and hopefully we'll catch some nice entries on the buy side to continue up and follow the trend. That's what I'm looking for right now. Yo guys, good morning. It is Tuesday, the 4th of February. And what you are looking at right now is the first setup of the week. The price just literally took off from this low and just absolutely drove into new all-time highs, and that's where we printed above the 2830s basically. And since then, made new all-time highs, retested the previous all-time highs, found support leading into a new daily candle. Asian Open happens. We break lower time frame structure back bullish, obviously by breaking this high. Then we even got the retest, rejection of the key level, and then the continuation towards the next key level at 28, 28. Obviously, since we had the breakout and the push up, like we pushed up like around 80 pips, I think. Then we did the pullback, and now we're pushing back up towards the highs again. Yeah, quite confident in this trade. It's a very good trade. The only thing is, it is pretty high. These are pretty high prices to be buying. That's why I'm simply just looking to capitalize on this range that we created, and I'm not looking to extend that much further. Even though we can extend to new all-time highs, I'm simply just trying to grab my pips and get out. But I was thinking, actually, should I have a 40 pip stop or a 30 pip stop? 120 pip target or a 90 pip target around here, which is where we just brushed past, actually. We just brushed past with 80 pips. So I don't know. I think I might go try and get away with the 30 pip, honestly, continued on towards breaking even above these highs here. So very, very bullish. But unfortunately, we just brushed past that TB just there. Honestly, I wish I took profit there, but I didn't. I did push stop to break even. So this was a break even trade. And we didn't take a loss on this actually, technically, because I'm not going to risk an entire stop when we were already like less than 10 pips away from the TP. So by then I had already like secured position, stuff like that. So when it actually did come back to entry, it stopped me out. And yeah, obviously I break even. So that first entry didn't work out, even though it technically did. We just brushed past that TP. It's just so unfortunate, but it is what it is. That was the Asian Open buys. Then price ranged around the same area. We did eventually, actually, before London Open, sweep the lows one more last time. But as you can see, reversal happened almost instantly on the 1 minute time frame after that. Started breaking structure, broke the highs again, pulled back to retest the broken structure, and then started printing back bullish again above the key level. This is all happening. Like this happened, the first breakout happens at London Open, retest, and then roughly like an hour after London Open, we're pushing back above the key level with bullish structure. So yeah, roughly took again the same buy position, but this time it looked better. Just continued the secondary phase of backwards structure a little bit more, broke the lows, but then we showed a sign of a shift literally at the open. So it was the same trade, it was just at London Open instead of Asian Open. And it obviously, of course, still made sense because we weren't breaking any major structure. We still maintained that bullish intraday structure and stuff like that on the high time frame. As price, of course, broke highs, was all looking well and good, but then pushed back below the key level. It still maintained the bullish structure because it didn't even break below here. It didn't even break below here or here. So it only broke below this like little low here. Went over 30 pips in drawdown. If I had 40 pips TP, 40 pips stop loss, I would have stayed in the game and I could have just capitalized on the fill of the range, which did happen. And obviously, price even pushed beyond that as well, so you could have even held even longer. But yeah, unfortunately, got stopped out on the later position. Basically, I took some sells below the 28.57s key level down to the 28.45s. I was trying to capitalize on 120 pips. I had a 40 pip stop loss, which was a pretty large stop if you compare it to my other trades. But I wanted to give it room to mature and stuff like that. So yeah, I took the entry around London Open as we got the retest at the key level. Continued down for around, I think it was around 90 pips there, or 80, 90 pips in profit. Immediately reversed, pushed back up above this high and broke structure to the upside. Now, we pretty much ranged after that, and it wasn't looking good because we were slowly like printing new highs on the lower time frame. Although we were like showing exhaustion here and we were losing momentum pretty fast, we were still like ranging, and then eventually we did get stopped out. It could have been avoided easily because it's a sell, and that is like automatically a low probability trade to me, especially in the environment we are on with gold. So most of the time, you're going to be your best bet is going to be buying gold. I'm just going to be 100% honest. That doesn't mean you just go in and blindly buy gold and you're going to make money. It doesn't work like that, unfortunately. But what I've noticed is the buys are definitely more profitable on gold than the sells. Manage risk, of course. I wish I honestly just had a 30 pip stop. It wasn't really necessary to have a 40 pip stop on this trade. Took these sells on Thursday London session, resulted in a loss. It was my second trade this week. We were at new all-time highs. We created a support level. We could see exhaustion happen here with failure to break into new all-time highs and continue on. And so this ranging leading up to like throughout Asian session that day, leading up to London, and then eventually we broke out to the downside. It just kind of made sense to at least try and capitalize on the key level range, the key level gap between I think it was 28.57s and 28.45s around 9 a.m., 10 a.m. Eastern. It did actually get filled. But I was trying to capitalize on the short range fill with the intraday bearish correction price was due for after having an insane bullish run for the days and weeks leading up to that. So yeah, it did make sense to take some short-term sells based on like the intraday structure at that current moment in time. Unfortunately, got stopped out when price pulled back and teased my TP. And then obviously it stopped us out, but still maintained that bearish structure realistically because we can break above these highs and it's kind of formed like a minor support level, a minor resistance level, sorry. And then price rejected, reversed, and continued down and broke the lows. So it did fill the range eventually and then hit for the better buys later.
Current position, I done more than 10,000 hours. Dreamt that I saw my name on a gravestone. Maybe then they would give me my flowers. Mum put 3 of our boys in a tub same time because we couldn't afford to shower.
Bit of a shitty week, as you guys know. We took nothing but losses this week. Unfortunately, the first trade was meant to be a win, but it was a loss for us because of a tight stop loss. Those were the sells in New York session that made new lows yesterday. Then we had a reversal, and this is basically the weekly low with a major rejection. As you can see here, we just tapped into this previous accumulation zone from Tuesday. We had like accumulation when we broke into new all-time highs. We literally tapped into that area and rejected that perfectly, not closing below 2840s. Major rejection, so clear reversal, right? Price starts printing bullish, obviously cleanly above the 2845s and pushes on above 2857s. Now, by Asian Open on the next daily candle, price is already like pushing up, making new highs, pushed above the key level a bit. Then at the open, it's pulling back to the key level, showing nice rejection on the lower time frame. Clean reversal, and price just took off to the highs once the volume from the open really kicked in. I've actually still got runners, like minor runners on this trade. I did secure majority at 90 pips at the 2866s when I got in at 2857s with the stop loss at 2854s. So 30 pip stop and 90 pip target, secured majority of it, and I'm going to see if I can run on with the runners into the next key level, which is 2875s. Based on where price is right now and the timing, I think this is a very good entry to have to hold. So, like, this is a lot of volume to have in the first hour of Asian session. So let's see if it keeps up. I did take a winner earlier in the day. Now, if the price action didn't look this good and it wasn't post NFP, I wouldn't have took this extra trade. Unemployment rate came in at 4%, so it came in low, right? Which means that is good, right? For the state of the economy. Less people are unemployed, right? Now, payrolls, this came in low, which is bad because it means less people are on payrolls. So overall, on the two main reports, it is a mixed result, right? Now you've got earnings as well, year over year, month over month, average earnings, and they both came out higher than much higher than expected. So that is again bearish for gold. So there's more bearish news going against the bullish narrative. But what I've noticed throughout this week and last week, something very key is that bearish news has to be really strong and pricing has to make sense. Like there has to be so many fundamental factors. I don't think bearish data reports themselves are enough to do really anything in the grand scheme of things when the narrative is so bullish. You understand? Like the narrative has to change at least bearish, even if it's for a short term, for these data reports to actually mean something. Unless like they're obviously way below what is expected. But this was only like 30k. Farm payroll only 30k below. What was the unemployment rate? I think the expectation was 4.1. So it was right at the min expectations, which again is obviously bearish for gold. I waited until after the whipsaws, and then we had much better price action. So we're going to go through that right now. Usually, this actually isn't a trade that I would normally take, especially if I did take a trade already in the day and it was a winner, because I don't like to really like push my luck, let's say, be greedy, still looking for winners after I was lucky enough to win a day. If you're winning, if you're walking away from the markets with profit in your account, then you're the top percentile of this entire industry and everybody that's trying to do this shit. So it's extremely, you got to be extremely grateful if you're ever in profit at the end of the day. So this was a little bit on the risky side, but I was willing to risk it, and it was a very good trade. Obviously, we had the mess here, but then afterwards we had a respect of the 28.57s. This is right after 9 a.m. Eastern, right? Failure to break lows we see here. We pushed down, grab liquidity, of course, when we had the whole NFP whipsaws and stuff. And we did the same for the highs as well. Rated these highs, rated these lows, and then bounced back up. Failed to break that high, but then pushed back down. Tried to break the lows, failed to break the lows. Now price is continuing back up, breaking both of these highs right here, shifting structure above the 28.75s. And now this is where lower time frame structure was printing so well going into 10 a.m. Eastern, which is a time period that I like to focus on a lot, especially after a huge data report like we had. Even though it was mixed news, more often than not, gold bulls just take over because that's the current narrative. It's greed, safe haven due to geopolitical tensions, tariffs. Like there's so many stuff that's supporting gold bulls at this point that like little data reports that come out bearish don't do anything in the grand scheme of things. Yeah, you might have a profit taking move once in a while. This was some quick buy scalps post 10 a.m. Eastern as we were printing this double bottom around the broken structure, breaking retest perfectly, printed a double bottom, started printing back above the key level right on cue at 10 a.m. Eastern, and boom, we went on to the 28.85s, which I believe it was around the previous all-time highs. A quick 90 pips, I believe. Yep, quick 90 pips, and we were out by London close. By London close, we were out. As we can see here, price tapped into new all-time highs, hitting the TP, huge profit-taking move back into the range to establish this big, large intraday range. That was the end of the week. 2 for 2, 2 wins, 2 losses. Somehow ended up in a profitable week. Friday saved the day. And this was the last trade to end this week. God bless. I'll see you guys in the next video. Peace. Bye.